A painting sells at Christie's in New York for $450 million. It is a painting of Jesus Christ. He is making a hand gesture. Art historians will tell you it is a masterpiece. Everyone else will tell you it looks like something you'd find at a church garage sale in Ohio. The buyer is anonymous. The painting immediately disappears. No gallery, no museum, no wall. It is loaded into a crate, driven to an airport, and flown to a warehouse in Geneva, Switzerland, where it will sit in climate-controlled darkness behind an armored door that requires an iris scan to open, surrounded by approximately 1.2 million other pieces of art that nobody is looking at. The painting is not an investment in culture. It is not a celebration of artistic genius. It is a receipt, an extraordinarily expensive 500-year-old receipt. And understanding why requires understanding the single most creative, least discussed, and completely legal tax system that the ultra-wealthy built for themselves out of canvas and paint. Here is the problem you have when you're worth several billion dollars. The government wants a significant portion of it, not all of it, just a lot. Capital gains taxes, income taxes, estate taxes, the kind of tax bills that arrive with a number followed by so many zeros that it briefly looks like a phone number. You have accountants. Of course, you have accountants. You have a whole floor of people whose full-time job is making sure that number gets smaller. And they are very good at their jobs. They have already moved things into trusts, shifted income offshore, structured the compensation in ways that convert ordinary income into capital gains. They've done everything the textbook says. But the government is persistent. And eventually, after all the maneuvers, there is still a bill, a real one, unavoidable. This is the moment your accountant says, "Have you considered buying some art?" The first thing to understand about the art market is that it is almost completely unregulated. Auction houses are not required to reveal who is buying or who is selling. There is no standardized appraisal process. There is no regulatory body determining what a painting is worth. The price of any given piece of art is, at its core, whatever two people in a room agree it is. This is not a bug. This is the entire architecture of what comes next. You have an $80 million tax bill. You do not write the government a check like a regular person. Instead, you go shopping. You find a painting. It doesn't have to be beautiful. In fact, beautiful is almost beside the point. What it needs to be is appraised by someone in your network using methods that are entirely legal at a number that is useful to you. A canvas covered in what appears to be someone's emotional breakdown. A sculpture that looks like plumbing. A painting so abstract that describing it requires the sentence, "It represents the tension between form and the void." You pay $30 million for it. The $30 million, by the way, does not go to the artist. The artist got paid years ago, probably not very much, and is watching this transaction from a distance with a mixture of pride and bewilderment. The painting now needs to go somewhere, not your living room. The living room would make it taxable. It goes to a freeport. A freeport is, technically speaking, a warehouse. But describing a freeport as a warehouse is like describing a Swiss bank account as a piggy bank. It is a structure located in Geneva, Luxembourg, Singapore, Delaware, and several other carefully chosen jurisdictions that exists legally outside any country's taxable territory. Goods stored inside a freeport are classified permanently and indefinitely as being in transit. In transit to where? Nobody asks. The Geneva Freeport alone holds an estimated 1.2 million artworks valued at approximately $100 billion. To put that in perspective, the Museum of Modern Art in New York, one of the most important art collections on Earth, has around 200,000 works. Geneva's Freeport has 6 times that, except the Geneva Freeport is a concrete block with no windows, surrounded by barbed wire, and the paintings are in crates. Inside, the security makes a bank vault look casual. Iris scanners, biometric readers, earthquake-resistant walls, climate-controlled rooms, armed doors with no names on them. Your $30 million painting sits in a wooden crate in a corridor that looks exactly like every other corridor next to a crate owned by someone you've never met, whose name is registered to a shell company in the British Virgin Islands. Your painting is in transit, indefinitely. And while it's in transit, you owe nothing. No import tax, no capital gains tax, no sales tax, no VAT. The tax clock has stopped. Your $30 million painting is sitting in a legal gray zone the size of a city block, appreciating in value, costing you a few $1,000s a year in storage fees and producing zero tax liability. Now comes the interesting part. The art market runs on something called price discovery, the process by which the market establishes what something is worth. In a normal market, price discovery involves actual competition between unrelated buyers with independent views on value. In the Freeport art market, price discovery involves a much smaller circle. Here's how it works. Your $30 million painting needs to be worth more, not because you want to sell it, because you need it to be worth more on paper. And the most efficient way to establish that a piece of art is worth more is to put it up for auction and have someone buy it at a higher price. The someone, in many documented cases, is another person who is doing exactly what you are doing. Two billionaires, two tax problems, two art collections, an auction house that is not required to reveal who is bidding. The first billionaire's painting goes up. The second billionaire bids aggressively. The price rises. Hammer comes down. The painting sells for $80 million. The transaction is real. The price is now established. The painting never leaves Geneva. The ownership changes inside the Freeport tax-free in a corridor that looks like every other corridor. And now there is a public auction record showing that a painting in this style by this artist from this period is worth $80 million. That record is real. It was established through a real transaction, and it is now the basis for everything that comes next. You now own a painting with an established market value of $80 million. You paid $30 million for it. On paper, you have a $50 million gain. You donate it to a museum. This is the part where the whole machine completes its cycle with an elegance that would be almost admirable if it weren't what it is. Under U.S. tax law, when you donate an appreciated asset, a painting, a building, a share of stock to a qualifying institution like a museum, you are entitled to deduct the fair market value of that asset from your taxable income, not your cost basis, the fair market value. The fair market value of your painting, established through a legitimate auction transaction that you and another billionaire in a matching situation agreed to perform, is $80 million. You donate the painting. The museum gets a painting. You get an $80 million deduction. The original tax bill, gone. The surplus, the difference between the $30 million you paid and the $80 million you deducted, that comes off the next bill. You have turned $30 million into $80 million of tax relief. The government, which was owed money, receives a painting it did not ask for, displayed in a museum it does not control, with a plaque that will have your name on it. The plaque is a bonus. It was never the point. The point was the deduction. Now let's talk about the painting the museum actually received. A 2023 investigation by ProPublica documented cases where donors obtained millions in tax deductions for property donations, while the public, the supposed beneficiary, received almost nothing. One case involved a real estate mogul who kept his nonprofit art museum in his guest house and had not shown it to a member of the public since before the pandemic. The charitable donation and the tax benefit were entirely real. The public benefit was a guest house in an exclusive enclave that nobody could visit. The Salvator Mundi, the painting of Jesus that sold for $450 million, making it the most expensive painting ever sold, was purchased by Russian billionaire Dmitry Rybolovlev for $127.5 million and stored in the Geneva Freeport specifically to avoid a $10 million Swiss import tax. The painting sat in the dark, in a crate behind an armored door. While it sat there, the mystique around it grew. Stories were written about it. Its provenance was debated. The art world became fascinated by it. When it eventually sold at Christie's in 2017, it sold for $450 million, a $322 million profit. The transaction, structured through the Freeport, was arranged to minimize tax at every stage. The $450 million painting has not been seen in public since the auction. Nobody knows exactly where it is. The buyer was listed as a phone bidder. The art world's best guess is that it is once again in a crate, in transit indefinitely. Here is the uncomfortable arithmetic. The Geneva Freeport holds an estimated $100 billion in art. That is $100 billion worth of cultural objects, Picasso's, Da Vinci's, Klimt's, Renoir, that exist in permanent darkness, producing no cultural value, accessible to no one, serving no function beyond the financial structure surrounding them. The entire National Gallery in London has approximately 2,300 paintings. The Geneva Freeport has 1.2 million. And the National Gallery's paintings are hanging on walls where people can stand in front of them and feel whatever it is that humans feel when they stand in front of a great painting. The Freeports collection feels nothing. Neither does anyone else. The art market is the last great unregulated financial market. No standardized appraisal, no mandatory disclosure, no regulatory oversight of transactions. The auction houses don't have to tell you who bought or who sold. The Freeport doesn't have to tell you what's inside or who owns it. The donation value doesn't have to reflect what the painting would sell for in a normal transaction between unrelated parties with independent views on its worth. Every other major asset class, stocks, bonds, real estate, commodities, is regulated, priced transparently, tracked, audited. Art is the gap in the financial system that was never closed, and the ultra wealthy have been storing their tax bills in that gap for decades. The system works so elegantly that it is almost impossible to be angry at any single person inside it. The accountant recommended a legal strategy. The auction house ran a legal auction. The Freeport provided legal storage. The museum accepted a legal donation and issued a legal receipt. The IRS honored a legitimate charitable contribution under existing law. Every step individually is defensible. Together, they form a machine that converts tax obligations into cultural prestige and a plaque with your name on it. The painting of Jesus Christ is still in a box somewhere. He is still making the hand gesture. Nobody is looking at him, but somewhere in a filing cabinet, there is a tax return with an $80 million deduction on it. And that is the only thing in this story that was ever really the point.